Hey guys, Mike here. So obviously there's a narrative going around. Every time there's something that comes up, an indicator about how this can predict a recession, it'll get presented and it'll get thrown around all over the internet. And there's a new one going around, and I'm going to kind of, in a way, not debunk it, but just tell you it's extremely over exaggerated, but also why it is important to follow, and it is something I'm following and will continue to bring to you. So we'll go through that. But more importantly, what's going on in the market now, right? You're seeing this rally take place, and so far it's had legs. And if you look what's going on right now, so we start with S&P, guys. I mean, you can see right here, great technical bounce. I mean, you see it's in this channel. It's been, as I told the members, rejected, supported many times, and then boom, you get this great bounce off. You get the feel of the first gap right there, and then we're heading to the second gap. Above the EMAs, RSI is looking bullish, MACD is crossing right now, and so that's what you see going on. That's why I'm not going to be surprised if this rally continues a little bit longer. Then looking at the NASDAQ 100, I mean, exact same thing. It filled the first gap. We're right below the second gap right now, as you can see. MACD is already crossed, and so RSI is looking good. And we're about to hit the money zone there on the stochastic RSI, I like to call it. And then, of course, looking at the weekly, I mean, why does this happen? It's oversold, right? Got oversold once, oversold twice, bounced both times. And so, we go back, and you can see right there, I mean, once they get sold or oversold in the weekly, you get some kind of bounce, whether it's the bottom, a bottom, whatever it may be. And when we go back to kind of prove the point, to the actual, bear markets that lasted quite a while, because it lasted, I think, on average 289 days or whatever it is. Now you can see right there what happens. Every time it gets oversold in the weekly, here comes a bear market rally, which this might be, who knows. And normally it's between like 15 and 22%, as you can see. And what's funny about this one is this was actually the bottom. We just did not know it. And over to the second long-lasting bear market we had there, you can see it gets oversold, bounces in that channel, bounces off channel again, it's oversold again. Get a nice 22% rip in 49 days. And so, as we come down and it gets oversold again, that's actually the bottom. And so, it's something to look out for. And then also ARK-K, I mentioned this one to the members the other day, and this one right here was right up against that upper part of the channel, and it actually did end up breaking out. And you've seen the stocks being held in ARK have just been going up exponentially right now, because they're absolutely all hammered down, all oversold, all down massively. But you can see, I mean, it's looking bullish. So we'll have to see, does it keep heading up to that next resistance line or not? But we'll see how it goes. And I'll tell you right now, quarter in, right? That's exactly what happened. March 15th, right? Last 2 weeks we rallied hard because we were going into the end of the quarter. That's happens for a number of reasons, right? I mean, you see that at regular companies you work for, how they'll push hard on the sales and try to get those numbers up. And so, hedge fund managers want their bonuses. A lot of people want their money. And so, you can definitely see, because nothing in the macro picture has changed, right? I mean, we still have high inflation, all this other stuff. And people, are going, well, yeah, but commodity prices are coming down. And that's a double-edged sword. I'm going to get more into that in another video. Because, yeah, it's great to see oil and all these other commodities come down. But why are they coming down? That's what you have to ask yourself. Why are they coming down? Right? What just happened? It's because they're scared we're in a slowing economy, and demand obviously is dropping. That's why, that's what sets prices, demand. So obviously demand is dropping, and so are these prices pretty fast. And there's that scare for that. So it's a double-edged sword. So yeah, hopefully it's going to help out with inflation, but also if it means we're going into a slowing economy, and you got, like the Fed in Atlanta predicting zero GDP or negative GDP, then that's not a good thing either. So it's really kind of, you win some and you lose some on that one. But, that's one thing to think about. Now, the narrative getting painted now is, which we're talking about one of these commodities, is copper. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And this is the headline you started seeing last week. You're going to see a lot more of this. I've already seen on YouTube and the news was talking about copper, and how, when you start to see a huge decline, or the copper industry enters a bear market, then that's when you have a recession, so to speak. And it's really BS is what it is. And I'm going to show you why here. Because yes, it has happened in the past, but when you go through the chart, you'll understand more. And understand the reason why copper is so important to follow, and I'm following it like a hawk, is because it's in everything. Transportation equipment, electrical equipment, machinery, consumer products, building construction, especially in houses and stuff. And, when we go through this chart, you understand what I'm talking about, right? Yes, it does happen. But when you go through this, going all the way from 1960 on, yes, you had a decline there, boom, there was a recession way back then. But look right there, here the copper price is actually increasing, and then we go into a recession and the price drops, because what happens in a recession? A slowdown. Same thing happens right there in the 70s. Again, same thing right there, as you can see. And then of course right there, yes, prices are declining going into the 80s, and then we have a recession, right? The economy slows down. Gotcha. And the next time you see it's kind of up and down, but it's going up into the recession right there. Here's declining for a long time. I mean, years it's declining. Does a nice pop up. Then we end up start declining again. We hit a recession. So if you want to count that one, you can count that one. And then of course this massive rise up over a number of years going into 08, because we had the big housing boom. And then of course it was actually going up when the recession hit and then fell off a cliff once we got into that massive recession in 08, of course, and then recovered. And then as we go over here, you can see, I think that's 2018 that's supposed to be, but you can see it was slowing down going into 2018 as well, going into recession, and then 2020 was the same way. But when you go back here, all these other ones, you can see the prices were actually increasing dramatically when we actually officially called into a recession, it looks like to me. And what makes this so hard to actually talk about is the fact that you got to understand, who is the #1 user of copper? It is China by a mile. It's like 50% of the demand is in China. You see US, how small it is compared to China. And you look at Europe, you look at Japan, you look at Russia, and you look at the rest of the world. I mean, when I look at those charts, and the latest I could find was like 2020 here, you know, China is the dominant one. And so yes, it is important to watch copper because one of the most used, metals out there around the world, but it's hard to predict, like, is it a predictor for us, or is it a predictor for a slowdown in China? I mean, when you got a country, as far as I know, and every source tells me, uses almost 50% of it around the world, to me, copper prices dropping that fast predicts more of a slowdown there than it does here. Not saying we're not, going to slow down or going to slow down, because I just talked to somebody today who's on the commercial side of the real estate market, as far as building houses and buildings and skyscrapers and all that stuff, and they said, "Oh yeah, it's definitely slowing down." There's no doubt about that. But it's just one of those things. It is important to watch. Doesn't mean we're slowing down. Could possibly. Doesn't mean more that China's slowing down. We know their real estate industry is definitely slowing down, right? And so, but also then there's the EV part of it, right? Where we know, because we're going to EVs now, it takes 4 times as much copper to produce an EV car than it does a conventional car. And so who has more EVs than anybody? And it's China. And hopefully, as we continue to go through the years, the demand is predicted to far outweigh the supply. So that's a whole nother ball game for the future, of course. That's going to take time. And so there's just a lot that goes into it besides just saying, oh, copper's going into a bear market, dropped 20%. Must mean we're going into a recession. It's just one of many, many indicators. Look how many, bond yields have inverted already, right? And so people are still waiting on the 3-month, and was it 3-month 10-year or 3-month 2-year? It's one of those two that still has not inverted, but many of them have, right? And so, but as far as going back to this rally right now, you're seeing, bond yields are dropping, oil prices are dropping, and I'm gonna do a little more research on this, but I just find it funny that we're going into the end of the quarter again, same way we did the first quarter, and then and nothing's changed in the macro part of this, by the way, and all of a sudden we're going this massive rally. And so, I'm enjoying the green, you enjoy the green. I know I'm putting in definitely some swing trades to take advantage of it and stuff, and I'm sure you're doing the same thing in another account. So, it is what it is, but just, you're going to see, mark my words this week, a lot of headlines on copper and commodities coming down. It means the economy is slowing down, and probably is, no doubt about that, but it doesn't guarantee us going into a recession. As you can see by the chart playing today, it just doesn't mean that. So I don't want you to be misled or anything. So anyway, I'll do some more research on the other stuff, and I'll put that out probably tomorrow, Monday. So have a good one, and I'll see you later.